Did you know your business could owe back taxes in multiple states without even realizing it? If you have expanded, hired remote employees, or started selling across state lines, you may have unpaid tax liabilities. Hi, I'm Monica Miles.
And I'm Bill Lowe.
And we're with Miles Consulting Group. If you have unpaid sales tax obligations, there is a way to fix it before the states catch you in an audit situation. Oftentimes with clients, we use what's called a Voluntary Disclosure Agreement, or VDA for short. And voluntary disclosure agreements are contracts with the state departments of revenue that allow taxpayers to come forward when they should have been filing. Maybe they had a retroactive liability and now they'd like to come forward and begin filing going forward. So you have to clean up the past first, and you do that usually via a voluntary disclosure agreement, or VDA.
So if you were to not go down the voluntary disclosure route and you were audited by a Department of Revenue, you would end up owing tax, interest, and penalties for all of those back years. And as a matter of fact, they can go back to the day that you created Nexus in that particular state, which could be many, many years back. So what a voluntary disclosure allows you to do is to not only remove the penalties, but also to limit the look-back period that the liability applies to, which could be 3 or 4 years instead of many, many more years beyond the 3 to 4.
Yeah, and that can save clients a lot of money. That reduced look back really helps cut off oftentimes a lot of liability. I also like to say a voluntary disclosure really puts you more on the offense with the state. You're not so much on the defense waiting for that audit notice to come.
VDAs are a way for a company to come forward that hasn't been discovered yet by the Department of Revenue. Now, Departments of Revenue have enforcement divisions that are on the lookout for companies that are not registered with the department. And the voluntary disclosure, as we said earlier, gives you the opportunity to come forward on your terms and be more proactive with the Department of Revenue rather than on a defensive under an audit. Departments of Revenue are offering voluntary disclosures to bring companies that they may not know about into compliance. And it gives the company an avenue to come forward, report taxes and interest, and for doing so, they're willing to forgive penalties. And it's a good opportunity for companies to clean up their past and limit their exposure, and then come into compliance and then begin filing go forward, right? Which that's what the state really wants. They want you to be in compliance and reporting taxes on a go forward basis. And they're willing to sacrifice a bit of the past.
Yeah, and they do get those past taxes. They just don't get the penalties, but they're still collecting the taxes for those years that our clients go back. So they're getting something. We do a lot of voluntary disclosure agreements for our clients. We tend to do a nexus and taxability review first, and then we determine what their exposure is. Oftentimes the remedy for backward-looking exposure is going to be to do a voluntary disclosure. We just finished one for a client that was in a merger and she was an acquisition target, and the buyer realized that there was this outstanding liability in many, many states. They had never really looked at it, and we ended up helping them do 20 VDAs in this project. So we came clean, got her up to speed, got the client where they needed to be, reduced a lot of penalties. We probably saved them several $100,000 in penalties through the voluntary disclosures. She was a very happy client. That's a main reason why they went through all this voluntary disclosures, to save the penalties and reduce the look back period, saving them a ton of money.
So if you need any help filing a VDA, please reach out to us.